even up until, say, 5-6 years ago, people used to think that bridging finance was the devil. And that's when bridging finance became far more popular, because they could then provide finance in place of the traditional banks. That's really what fueled the expansion, and then more and more companies opening up.
There was an opportunity and many people went.
That's right.
Welcome to the Investment Spotlight London edition, which is a new Consulco Podcast series where we explore and analyze investment opportunities in the UK with industry experts. Today, we're speaking with Simon Michael, who is Consulco's London Credit Operations Manager. Simon has been in the financial services industry for 22 years. He's covering mortgage broking, commercial banking, and bridging finance. Hello, Simon.
Hi, Isabella. Thanks for having me here today.
Yeah, it's my pleasure. Could you tell us how and when bridging finance first appeared in the UK and what its initial purpose was?
Sure thing. Well, a lot of people don't know that bridging finance actually started in the 1960s, which is some 60 years ago now. The banks and building societies at the time were offering loans to their clients who wished to buy properties but hadn't sold their own property yet.
All right.
That then got dubbed as a kind of a bridging finance solution. Although it wasn't called bridging finance back then, bridging the gap and so on, people would just coin that term for that kind of loan. And it's kind of stayed like that through until the 1980s, when more funding became available and more lenders wanted to get in on it. But it was never a cheap option for people. It was quite, an expensive lending option. And then going forward through to the late 90s and 2000s, there was an explosion in property value growth in the UK, and a big increase in the market. And then more and more lenders came to the fore offering bridging finance.
They saw the opportunity when the boom happened.
That's right, with the property boom, definitely.
Bridging finance used to have a less favorable image. How has it become more accepted today, and what steps we're taking to change its perception?
Well, less favorable is a kind of a polite way of saying it. Bridging finance used to be looked at very harshly by people, and even up until, say, 5-6 years ago, people used to think that bridging finance was the devil. But in fact, it never really was. It was always there for a purpose. But the reason it built up that reputation through like the 1980s and 90s and 2000s, because the rates were high, the exit fees were high, the penalties were very high on these loans.
And that's changed now.
Well, this is still there, but not to the same extent.
Okay. And
in the earlier days, the bridging lenders were far keener to repossess a property if the client didn't pay, and there was nothing like treating the customer fairly back then. There was no protection for the clients at all back then.
And it's changed so much in the last 5 years.
No, I would say in the last 15 years it's changed like far more positively, especially since more and more lenders have come to the market, more reputable lenders have come to the market offering their products.
Well, it is a win-win situation for both parties.
As long as the client calculates into their position what the rates, the cost of the rates and the cost of getting bridging finance. And if it means that they can get that property rather than not get it, then it is a win-win in that respect.
I believe as long as it's a transparent system where you know the fees and know the terms.
That's right. Yeah, exactly what you're paying, exactly what it's going to cost you.
Exactly.
And then people can be more comfortable with it.
Initially, bridging finance was mainly used to prevent chain breaks in property transactions. How has its purpose evolved to cover various short-term financial needs?
So, as I mentioned earlier, in the 1960s, it was the chain break scenario which bridging finance was developed. But, it's now evolved into a myriad of different things. It can be for property purchases, auction finance, refurbishment, development finance. People use it for speed of turnaround or for lending where mortgage lenders won't lend. And it's just become more and more popular.
Okay.
That's what it's been used for.
Some bridging lenders now offer development finance, buy-to-let, and even become banks. Can you provide examples of such transactions and why they happened?
Yeah, so one of the best-known stories is a bank called United Trust Bank. They actually started off as a bridging lender, and over the years got bigger and bigger and bigger and opened and turned into a bank.
Okay.
There are other banks who do bridging finance, and there are bridging lenders who offer more like banking products like buy-to-let. So traditionally, bridging lenders would offer a term of 6 months, 12 months, 18 months, or 24 months. And now more and more bridging lenders are offering what we call, say, buy-to-let, where they're doing a 5-year rate or a 10-year rate. And they're moving more into traditional bank lending territory. And there's other banks who are doing bridging finance and moving into bridging territory. So I think that, in the future, there might be a lot more sort of synergy in terms of the products being offered from one lender to another. And maybe even some of the bigger companies will buy some of the smaller companies, and we'll have less lenders on the market, less diversification, but the same amount of products. Maybe.
Bridging finance is much smaller compared to mortgages in terms of the amount advanced. What factors contributed to this difference, and what does the future hold for bridging finance in the market?
Okay, well, if you look at it from a basic numbers point of view, you can see that the mortgage market is massively bigger in terms of there's billions of pounds worth of transactions happening on a monthly basis, whereas in bridging finance, it's about 150 million a month that goes out. So I would probably say, to put a percentage number on it, is let's say that the mortgage market covers 95% of all transactions and the bridging finance market covers 5% of transactions. But what that means to me and what it holds for the future is there's still massive growth opportunities for bridging finance,
right? Because
they only have 5%. So as time goes on, we're going to find that more and more people are more comfortable with bridging finance, or maybe bridging lenders will diversify their products to bring in more mortgage-style lending products, then taking more market share from mortgage lending. And it's such a big market that the UK lending market is huge, and there's so much opportunity.
Right.
That's why there's so many lenders, because everyone wants to get in on it and earn money.
And that number used to be smaller, and then it grew to 5%. Clearly.
That's right. It would have started from nothing, and it's grown over the years. It's taken a long time, but it's got there, and it's probably going to continue growing.
Simon, so what do you see happening in the next 5 years in the bridging finance industry?
That's an interesting thing to look at, because as long as the interest rates stay stable or start to reduce, interest in bridging finance will increase as more and more lenders relax their criteria and start lending more money, opening up their product ranges. And something I referred to before, that I could see maybe in 5 years' time, we're going to see more bridging lenders having more mortgage-style lending products, be it 5 or 10-year products, that will bring them more in line or more acceptable terms or comparable terms to mortgage lenders. And I can see more products coming out into the market which allow a lender to set themselves apart from the other hundreds of lenders out there. There'll be more interesting products coming out, more tweaks to certain products, and there's always some kind of promotion with bridging finance lenders. They're always trying to separate themselves from all the other ones out there. So everyone's always offering something.
Right.
There's always something special going on in the market. But the ones that are going to be successful are the ones that are going to have a true diversified product line where they can offer everything to one client who walks through the door.
The feeling I'm getting is that there is great investment opportunities in the UK, and the opportunities are only growing.
They're not getting smaller. The opportunities are growing. There's more and more out there.
I'm really excited what the future holds for bridging finance, and it seems like the future is bright.
It will be, definitely.
Simon, thank you so much for your time.
Absolute pleasure.
Yeah.
Thank you.
Thank you.
Thank you very much.